realized vol has started to roll over. We obviously had those really big drops in spot in the previous week, and Ethereum realized went up to 100. It has all started to come down as we bounce, and the moves have become a bit more orderly. So we've got 10-day realized on Bitcoin back into the mid 70s and ETH in the mid 80s. Short dated implied vols have been hit. 1 month vols down about 2 or 3 vols, and shorter dated like weekly stuff is down a lot more, 5 to 10 vols. So we have seen that front end getting hit. And you know, it does make sense. We kind of think as you rally between here and 70k, vol continues to grind lower. Similar story on Ethereum as it grinds from 32 to 35, 3600. Vol probably grinds lower, but then if we then start to break above the top of those ranges, then we'd expect vol to catch a bid again on the upside. But right now we're in this kind of pocket where we think vols will continue to come under pressure as the market stays bullish. Both assets do remain in negative carry, which is why we do think, well, no, sorry, they're in negative carry, but that's because the realized vol still contains the large moves from the previous drop. As those moves drop out of the sample, like if we were to look at a narrower sample, like 5-day realized, it's much lower. So you don't have negative carry if you're looking at super short day realized, but obviously the 10-day realized needs to catch up a little bit. So the implieds are kind of leading that down, and you will see a stair step lower in realized if moves stay 2-3%ish, and those big 8% moves on Ethereum go away, and you'll start to see that. So I wouldn't read too much into the negative carry that we're seeing as a reason to own a load of gamma right now, because the super short dated realized has kind of fallen off a cliff. Okay, and then we are starting to see some gamma shorts coming in as well, like certainly in Ethereum. We had those April gamma sellers in calls. They've rolled those into May. And then lack of geopolitical escalation after Israel's attack is helping all risk assets rally, is helping cross-asset vol get hit. And really the focus this week is going to be all about mega cap tech earnings for equity investors, and that is going to shape where the sentiment is more risk on or risk off. So that's kind of your next catalyst and your next thing to look at. I don't think if you get a few bad tech earnings that's necessarily going to derail crypto, but if you get good tech earnings and NASDAQ continues to rally and goes back towards its highs, then the general sentiment will probably drag crypto higher. That would be my sort of base case. Looking at term structure, we do have a falling of the front end, as I've said, taking it back into contango in both assets. Front end expiry is really getting smashed after the halving, as again we said would happen. The rest of the curve shifting about 2 to 3 vols lower in Bitcoin, and skew flipping back towards neutral from deep input premium. Call premium still exists for the long end. That has been the case for a long time. In terms of Ethereum term structure is also in contango. We saw a similar move in the front end vols, 5 to 10 vols lower. But in the middle of the curve, we saw a bid. So June vols were actually 2 vols higher in Ethereum. So that's holding. We did flag the Ethereum medium-term vol looked good value relative to Bitcoin last week, and it is holding up better as a result, basically, even though the realized in both assets is starting to fall. And then long end did get a bit offered, maybe about half a vol on Ethereum, but nothing too dramatic. And then put skew fading as well in Ethereum, although it hasn't quite flipped into call skew yet. Out to May, we are still seeing a put premium, but back in March 25, further down the line, we do still see a 5 vol call premium that is not budging. Okay, relative value, as we said, because of the way ETH vol's holding up better than Bitcoin, we have seen the spread move higher. So the spread has gone from about 1 or 2 vols up to about 4 vols in that middle part of the curve. And whilst it was trading at about 7 vols, 8 vols in the front end with the gamma spread, that's come down to be in line. So we've got a fairly flat curve at around 3 or 4 vols across the entire curve, whilst the realized still materially higher, looking at between sort of 11 and 13 vol realized with Ethereum over. So you are still seeing some value there, not as much value as there was. And actually, I do think it's quite conditional on the direction of the market. I think on the way down, Ethereum will probably out-realize. On the way up, at least for the next sort of 5 or 10%, I think Bitcoin will probably out-realize. I might be wrong, but that's just my sense of, you know, in the immediate term, what is going to be the catalyst to really get us going again to the upside, right? The ETH Bitcoin spread does look like it's set to go lower. It did break some supports. It hasn't got straight back above those. So I wouldn't be surprised if it needs to test lower support levels, which may be a good 10, even 15, 20% away from here. hard to see that really happening if crypto rallies. If crypto rallies, I maybe a 5% underperformance by ETH because Bitcoin rallies first and then ETH catches up later. That's possible. But if you're really going to get 15% underperformance by ETH, I think you're going to get that to the downside. That would be the most likely setup, in my opinion. In terms of what we're doing, we're not touching the spread still. Remember, we haven't really played in this spread for quite a while. Waiting for lower levels in the spread to maybe reinitiate some RV trades and get long some ETH calls against Bitcoin calls for later this year, but not in a rush to jump into that trade right now. Okay, and then where did my cursor go? There we go. Skew wise, so that rebound from 60k in Bitcoin and 3,000 in ETH has led to a flip back to a more neutral skew, particularly in the front end expires that were deeply in put premium. ETH is still holding that put premium out to May, but BTC's got a call premium everywhere except sort of this week. Now, the longer dated skew persisting in both assets at 5 vols of March 25 kind of is the options market way of saying that this bull market is most likely still on until at least the end of the year. We did flag call ratios as a way of smartly buying the dip, but not taking too much risk on vol resetting and if the market didn't bounce within that time frame. So call ratios made sense for us in April. They have actually started to work out, make a little bit of money. But we are wondering like how much more room does vol actually have to come down. I think it's got a little bit of room, but I do think it's the fact that it's coming down that fast. I think it's running out of room pretty quickly, right? So for the, like I said, for the next sort of 5% upside, I think vol could continue to come in, but then it will probably find some support. And if we continue to rally, I'm pretty sure it will go bid again. Okay, we're looking neutral on the spot side on the compass, but it is saying sell vol still, as implied vol is still elevated in its range. But obviously, you know, it really will depend on what kind of realized does. But if realized stays the way it has done for the last few days, then yes, vols are probably going to continue to come under pressure. Flow wise, volumes were kind of very slightly higher, up to about 9.8 billion in Bitcoin. We saw puts and put spreads being bought in April to May expiries in that 60k to 55k zone. Upside buyers we also saw in the April 64k. The call spreads up there as well, using the 70k strike. Some outright calls bought as well in the 70k strike. And May 69 calls were very active as well over the last week to 10 days. Calendars have been pretty active. People generally on calendars have been selling longer dated to buy shorter dated with a strike closer to the money. So kind of the opposite of what we often see. I mean, it could be a roll of shorts. It could be that people are long and just rolling them back down to get more bang for their buck if we did get a rally. So you know, a mixture, I would say there. But in general, yeah, quite a few calendars going on in that 80k to 100k region, shifting risk around. In terms of Ethereum, volumes are flat at 6.25 bill. We saw two-way flow in April options. That's all those pink bars. We had calls being sold in the 31, 3200 area, calls being bought on the upside in the 34 area as well, and just general protection trading in the kind of 31 down to 2700 area. On-screen flow was really the dominant flow that stood out. We had obviously April shorts of 3,500 and 3,600 calls getting covered. So that was a buyback of shorts to then resell May calls in the 3,600 to 3,900 area in decent size, looking at like 40k type options there. We did also see on screen a big sweep of way out of the money June calls, actually. The 6,500 calls in June. Very far out of the money, but just an interesting on-screen trade there to be aware of. Okay, so that's the flows. Gamma positioning wise, we are seeing a big short gamma position building in Bitcoin. So we've gone from about 30 million short to about 60 over the last week. That's kind of been as we've bounced and a load of call buyers have come in, we've rallied up towards the call strikes. So we're kind of sitting in the middle, call it swimming in the middle, if you like, of this this zone of short strikes on Bitcoin. So that is here. So we've got a big long strike here at 65, but then all of these are short. So if we continue to rally, then there could be a bit of gamma squeeze potential where this takes us up to 70k by this Friday. That would be a realistic potential target, I would say. If a suitable catalyst emerges, or if we just get general risk on in stocks and the dollar weakness, those two factors probably going to be enough to like puff crypto markets a bit higher. Ethereum dealer gamma was pretty flat on the week. It had a little bit of a spike, but reverted back down, sitting at about 10 million. Looking at the strike makeup, the street is short the 3,000 downside strike, long the kind of at the money-ish 3,300 strike, and generally kind of neutral to probably small long if we go higher, given that the May Vega is going to dominate there, basically, right? So that's where we are. A little bit of a different setup, I would say, between the two assets, again, which should, in theory, support Bitcoin outperformance on the upside. If Bitcoin is short gamma on the upside and ETH is long, then in theory, there's going to be less of a stingy rally on ETH. But if there's a narrative to drive ETH, then ETH could definitely rally hard as well, and it has got a high beta. So just so that you got to balance those factors. Gun to my head, though, I do think Bitcoin's the one that probably drives the rally for the next 5%. Okay, that's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.